a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to talk about inverse ETFs now in light of the recent market correction with our ETF strategist, Eric Dutram. So is this the market correction that everybody was calling for?
Well, it really is, because it's the first one we've seen in a very long time here. And okay. I think we were long overdue for a correction here. But what's been interesting about this one is it's permeated through all sectors of the economy, not just the high-flying biotechs or anything like that, but the Dow Transports, the NASDAQ, pretty much everything saw at least a 10% loss over the last week. And year-to-date gains have been wiped out entirely. So the intensity of the sell-off has been pretty surprising, but I think we were long overdue for something.
The intensity in the short time period.
Exactly, in that 5-day span. And then actually, if we look to international markets, these have been even more impacted in just the same amount of time. China has been 10% loss, and it's kind of its large cap market, but its small and mid cap stocks have gone down almost 20% in the time frame. And then on this slide right here, I have a couple countries that have lost about 10% in the last 5 days, and I was combing through the list of country ETFs, and pretty much all of them had at least a 5% loss over the past 5 days, no matter if you're Norway or Nigeria.
All right, let's stick with China, because they seem to be kind of the trigger. What's going on with their economy seems to be the trigger for the event here. So you've got a couple of ETFs, right, with exposure to China, CHAD and YXI?
That's right. And these ETFs, they're going to benefit if China continues to go down. They take the inverse exposure of some of the top markets in China right now. CHAD follows the A-shares market, which is the most impacted. It's the Shanghai and Shenzhen market. And YXI is the opposite of FXI, which is the biggest China ETF in the market right now. That mostly focuses on large cap banks, oil stocks, items like that. YXI is up about 10% in the last week. CHAD's up about 20% in the last week. So these are going to basically do the opposite of whatever you're seeing in your normal China ETFs. So if we can continue to see a sell-off here in China, these are going to be among the biggest beneficiaries. But if China moves in a big way to sort of stem the tide here, these are going to be hurt.
Oil is also in focus as part of this story. You also have an inverse way to play that space.
That's right. DDJ is the symbol here.
Sorry, easy for you to say.
A little bit of a tongue twister. But this fund, it's the inverse of IYE, which is a popular oil and gas ETF. It focuses on large cap oil stocks. ExxonMobil and Chevron account for about 33% of this basket. So as these companies go down, this fund is going to go up. Once again, it's negative 1x exposure. So whatever IYE does on a daily basis, this will do the opposite.
And as you said earlier, NASDAQ no exception. They've been hit as well.
That's right. There's a lot of high-flying stocks in the NASDAQ. These have been among the best performers of the last couple of years. But if you believe a further correction is going to take place in this market, then PSQ is the ETF for you. Unfortunate rhyme there, I guess. But this is the inverse of QQQ, which is the ultra-popular NASDAQ 100 ETF. And PSQ is up about 12% in the last 5 days as this NASDAQ market has slid. You should just note that a lot of the large components in this ETF are, your Facebooks, your Microsofts, Apples of the world. So make sure you have a bearish take on these stocks before going in and betting on PSQ for sort of a short-term continuation of the correction.
Then we cannot overlook the volatility ETNs either.
That's right. These aren't necessarily inverse ETNs, and ETN is just exchange-traded note.
Right.
But VXX is a great example of a type of product that's going to really benefit from market turmoil. It tracks what's known as the fear index. It's the CBOE volatility index, and this is up about 62% in the last 5 days. Now, it's important to note this is really a terrible investment for long-term investors. Thanks to the futures curve, and we could go into that for a whole other exploring ETFs. Over the last 5 years, this ETN is down about 99.98%. So it's really designed to be used for short-term trades, short-term bets. Do not hold this as a long-term pick, just because, and if you look at a 5-year chart of this ETN, you'll see how terrible it has performed over that time frame.
And as a time reference, when you say the last 5 days, we're sitting here talking about this on, what is this, August the 26th, I believe?
I think, whatever the Wednesday of that,
of
the
this
last,
week
last,
is.
one, the last one of the month is.
All right, and so finally you've got some words of caution here about these.
That's right. All these are, so they're all daily resetting ETFs, except for VXX. And what that means is each day they're going to, you know, sort of sell off and go back into the fund at the beginning of the following day. And that's important because long-term performance might deviate from what you think, you know, it's going to be. And this becomes even more pronounced when you have leveraged inverse ETFs. So if you're trying to bet on a longer-term correction, I'd focus on the negative 1x or negative 2x products. The higher the leverage, the more imbalance there might be in some of your long-term holdings. So keep that in mind. And once again, these are not meant to be long-term holdings by any stretch of the word. So just watch out there. If you want some more long-term picks that have low volatility, there's a couple ETFs out there. We got USMV and PHDG. Those are both kind of have a volatility component to their holdings, and they might be better picks if you want a longer-term way to hold out in this market.
All right, and do you own any of these that you rattled off?
I do not.
All right. Thanks for stopping by, and if you want more information on ETFs, ETF specific or ETF commentary, go to the ETF section of our website, zacks.com. You can get there from the homepage using the Funds tab in the top toolbar. And if you watch our videos on YouTube, another reminder, you can subscribe to them there as well as comment on them. With Eric, I am Terry Ruffalo.